Hey, good afternoon, everybody. We're going to go over our Forex trades for today. Just one trade again, which came last night. We only had 10% of our normal size because we knew, non-farm payroll numbers were coming out this morning. Algorithm was giving indication that this pair was going to work out. We were up very slightly at one point right before the number came out. But then when the number came out, and you could see what happened. But let's first talk about that non-farm payroll number that was announced this morning, the biggest number of every month. Headline number, 295,000 jobs created versus an estimate of 240,000. Sounds fantastic. Unemployment went down to 5.5% versus an estimate of 5.6%. Still sounds fantastic. Until you delve into it, like I said, headline number sounds great, but you have to read into these things. If you read into it, you're going to see labor participation rate fell again, 62.8%. It's at 30-plus year lows, remains at 30-plus year lows. And the biggest thing in our opinion, the biggest industry with job growth again in the month of February, this was in December and January and November, but for the month of February, the biggest industry with job growth was the restaurant business, hiring waiters, waitresses, cooks, line cooks, whatever. 59,000 jobs were created for the month of February. Yet in manufacturing and construction, manufacturing was 8,000 jobs created. Construction was 29 or 28,000, whatever the number was. Our point is here, apparently the United States of America is building their economy on the backs of waiters, waitresses, cooks, line cooks, chefs. You cannot build and have a thriving economy on that. Let's all face it. What builds an economy? What thrives an economy? Construction, manufacturing. 8,000 jobs created in manufacturing. I mean, come on, that's what is that? 15% of the same number of the restaurant business. Total of 295,000 jobs were created. Only 8 of them were manufacturing. That's a complete joke. So you can see what's going on here. The very, very wealthy, the elite people, they've been enjoying this ride that the stock market's been on, an enormous gain since the financial crisis in 2007 and 8. They're living high on the hog. They're going out, spending money in restaurants and going out to dinner. Matter of fact, the other day was reported for the first time ever, more money was spent in the restaurant business than there was money being spent in grocery stores in this country. That is just staggering. Hopefully, they're tipping their waiters and waitresses far and above the 20%. So waiters and waitresses could then go out and spend money on landscapers and buy new cars. I mean, I don't know too many waiters and waitresses that are going out and buying, beautiful new cars, Mercedes and Lexus, having landscapers, all the little things that the high end people can do. It's just not there, man. I'm telling you, this is not a good thing. The disconnect and the disconnect in macro data from the government in the past month, I believe the number is 68 announcements, missed estimates, while only 8 beat. If you were to plot the macro data in the month of February that was reported versus the rise in the stock market, now they usually are very highly correlated. They are so disconnected, it's scary. And macro data ultimately will lead the stock market. Unless all this macro data is wrong, I mean, they could only stay disconnected for so long. One of them's got to catch up to the other. Whether it's the macro data catches up to the stock market or stock market catches up to the macro data. Hopefully, if the macro data catches up to the stock market. Because if it's the other way around, the market's going to get beat up. Then the wealthy are going to get beat up. And you want to see if things get bad. You won't be able to get a job as a waiter or a waitress. Anyway, we were in a trade, New Zealand dollar, US dollar. We got a signal goes long, 0.49, excuse me, 0.74969. This was overnight action. Came in the office this morning around 6:30. We were relatively flat, maybe down about a few pips, and then it finally broke through the figure here of 75. And right before the number came out, she ran all the way up to about 75.15 or so. Again, only 10%. I mean, that's equivalent to we were up about 15 or 16 pips. That's equivalent to 1.5, 1.6 pips, which is not even worth taking. Look, if this number was terrible, which when you have 68 data points coming out in the month of February that miss estimates, only 8 that beat, odds are it's going to miss, right? Well, it didn't. It beat, obviously, as you know, as we just discussed. And you can see what happened. The ensuing sell-off came. We risked up to 100 to 120 pips. We got out. We lost 132 pips. That's size adjusted 13.2 pips. Well within the range of what we normally risk. We normally risk 20, 25 to 30 pips. But again, we weren't going to risk that much because we knew non-farm payroll is coming out, the biggest number of every month. So we're not willing to risk that much during a non-farm payroll if we take a position at all. You can't scalp around it. That's impossible. This was looking good. We had the indication it was looking good. We had it wasn't great, but we had over 70% odds it was going to work out. Didn't work out for us. Anyway, so that's it. Gave back 13.2 pips on that one trade. And like I said, it's impossible to scalp on a day like today with the non-farm payroll. And there were no scalps last night. So that's it. We're going to wrap it up. Been a slow month so far as trades and the number of trades, but we're still positive for the month, which is good. Have a great weekend, everybody. Doubt there'll be any signals the rest of this afternoon. We'll be looking again to start Sunday evening and Monday. Have a great weekend, and we'll be back Monday, assuming we get some action.